Hello, friends. Welcome to Season 2 of the Club Podcast. Each week, we bring you long-form conversations with the people building at the edges of crypto and community. At Seed Club, we believe in a world where people, not platforms, capture the value created online, and where community-owned networks are some of the most valuable organizations in the world. Join us for a front-row seat to the latest insights and tactical learnings at the intersections of crypto and community. Today, I'm pleased to be able to bring you a conversation with Tina He, product designer, entrepreneur, and co-founder of Station. And we talked a lot about, a whole bunch of big topics. This is the first time Tina and I have actually had a chance to sit down and chat, though we've crossed paths many times, both online and off. So we got into some big topics: reputation, governance, token economic models, and both the opportunities and some of the limitations that she sees today. We also talk about Station, which is a Web3 data aggregator really focused on showcasing contributor contributions and making that visible to DAOs. Very interesting starting point where they are building tools from the contributor's point of view. Found this conversation very interesting, and I think you will too, so let's get into it. Tina, welcome to Club.
I'm so happy to be here. Have been in the club for a while, or been hanging out with members of the club, so super stoked to be jamming with you right now.
Yeah, we roll deep. Can you give people a brief intro? Who are you? What are you working on?
Yeah, I'm Tina, and have been in the DAO space alongside, C Club and a few others, and coming from the angle of building Station. So I'm one of the co-founders of Station. We're building a suite of Web3 native tools to help, contributors, members better coordinate and do work together, which I know that is how I got to know C Club, actually through Nicole. Was a very serendipitous event in New York during NYC NFT last November. And we were, talking about how difficult it is to operate a DAO. So we created a program called DAO Therapy, where, a bunch of DAO operators came together and talked about each other's problems. And we found that extremely therapeutic, and we kept that tradition. And also a great way to get to know all the pain points experienced by DAOs, and great for developing a product just for this audience as well. So, yeah.
I haven't had a chance to attend one of those, but I've tried numerous times, and everybody who goes seems to have wonderful things to say. And I think it just speaks to both how kind of weird it is to go build in this community token DAO space. Like, it's still weird, and it's very easy to kind of feel alone out in your world there. But also there's so much consistency and similarity in these challenges and coming together. And we're big believers in the value of community, and I think that's a great example there. I'm curious how you found your way down the crypto rabbit hole, and specifically into DAOs. Like, what was the thing that you were chasing?
Totally. So before joining this DAO and crypto ecosystem, I was actually first started my career as a designer and have always loved product design, but figure I really want to be an entrepreneur, and that's something that I've always wanted to do, and especially fascinated by networks and markets, and generally just business models that allow long tail of interesting primitives to exist that otherwise would not have without the internet. So just like every other internet nerd out there, got really fascinated and really want to understand how it works. So ended up realizing that the best way to learn how it works is actually maybe sitting on the other side of the table and just look at the businesses themselves. So became a venture investor for a few years. So first was at a firm called NEA, which is a multi-stage firm. So got a very high overview of different stages of companies, and particularly focusing on developer tooling and community-driven, like product-led growth and all that stuff that we're seeing. Actually, a lot of similar patterns with what's happening in crypto. And after that, joined Pace Capital, which is a much more boutique firm, also focusing on a lot of different, a lot of similar themes, but through a very different angle of like wanting to focus on the company building side. So Pace Capital was a Series A focused firm, which means they only invest in one stage with very meaningful ownership and kind of, board level relationship with the founders. So got to know a bunch of really incredible builders and founders in the space. And throughout this journey, actually got down this rabbit hole of back then called the buzzword creator economy, and basically just thought, this whole thing sounds like too good to be true, right? Of course, we want to give power to the creator, all that stuff, makes a lot of sense. But if we actually want to understand the business and understand where value actually flows to creators, a lot of the platforms end up doing not that, because the platform ended up, accruing a lot of the value and a lot of things that Web3 people are already familiar with. So basically got really obsessed with this new primitive called NFTs and DAOs, because, there are definitely new ways to both, accrue value to the people who create them, and also a new way of coordinating people to just create things together. And obviously we're already seeing very, very dangerous path potentially that we're going down, that is just repeating the history, which just show that, humans rarely change. It's just about designing the incentive systems that potentially, coordinate them in a way that would be the best for everyone involved. So it's just such a fascinating design space as well, like intellectually just super, super drawn to the intersection of like social technology, token design, tokenomics, and also just the tech of Web3 is super cool to build with. So kind of that's where I am now.
I love it. I see a lot of similarities in your history there. Like I started working and graduated university and came in just as social media was taking off, and was part of that like democratized media movement and really excited about it. And there's definitely a lot of opportunities, but also very quickly saw like, okay, if we're transitioning from the firm to the network as like the predominant economic coordinator, right? And then if those networks are all owned by a few people, and the incentives of those networks naturally across the board change from being additive to early members to being extractive to later members, and seeing that sort of potentially move across the entire economy. That was like absolutely terrifying to me, especially as like, I always saw myself as like, a freelancer, an independent, a small business. Like my dad ran a small business. That was really where, I came from. And so like, it was so excited to be empowered by early Facebook and Twitter and YouTube. And then, as monetization comes in and as algo feeds come in to be able to sort of drive advertising, and as advertising becomes the base model for revenue generation, this becomes an opportunity for them. You just start to turn down organic reach and turn up paid reach, and you got $1 trillion company. And yeah, it sounds like sort of even through that lens, when I look at what you're working on at Station, I can see a lot of those pieces sort of fall into place. So maybe that's a good time just to introduce Station. Like what is Station, and what's your thesis there?
Totally. There's a few components to that thesis. And number one, I think that you actually embody a lot of this thesis is around the independent worker. We just believe that what crypto uniquely enabled, and when we're seeing DAOs and members of C Club, members of a lot of these emergent communities, is that people that traditionally could not work in these functions are now picking up roles that kind of resemble that of a freelancer, but rather than being rewarded or being treated as a second-class citizens of a like institution, they're more so being treated as a true owner of the community. And that both economically and psychologically is a very fundamental difference, where people actually now feel, if the ecosystem is designed well, then feel empowered to actually be a part of participating in driving this ecosystem forward. So that's kind of the number one thing that we want to enable and empower, is that making sure people are actually allocating funding, allocating tokens, allocating ownership where their mouth is. Like people are saying and talking about how this is the ownership economy, but now we already observe from the various unfolding events that we've seen in the past weeks where that's not always the case. And it's still repeating the playbook of the small guys get hurt in the end, and a lot of times labor is still not treated the way that capital is in this ecosystem, which, to be honest, it's not like it's part of the design, and a lot of the flaws in the system just wasn't being taken like kind of into consideration early on, which is normal. And it was a good beginning, because a one token one vote type of governance model, we kind of expected the outcome from that type of design. So I think that's the number one thing, is like, if actually the KPI or the just general North Star of Station is just like how many tokens, right, can we actually allocate to contributors, to people that actually create value, and how many new like quote unquote job opportunities can we create with this new primitive of labor and contribution. So that would be like the first general thesis around that. And the second thing that we consider is that, okay, we have this set of tools and new technologies that now Web3 enables, like the interoperable way that we're thinking about data, thinking about your contribution history, and how by being a part of C Club in the future, how do I leverage that contribution to be a more kind of trustworthy or more desirable candidate somewhere else, and vice versa. So the interoperable data side, and also the composable side of thinking about how do these data within one community actually can be leveraged, when I participate in others, which is kind of related to the first one with the nuance that on the application level, there's just not that many primitives that are still being built. So if you think about application, it's business applications that leverage data about who you are, how many tokens you hold, how much power you have, who you've worked with, and all these data to actually empower new logic to exist. So that's, both sides, from the interoperable beta side and from a composable application side, are both highly interesting in terms of new ways to empower this new type of fluid work. So that's kind of the second pillar that we really lean on. And the third thing, I guess, which is also interesting to us, is thinking about back to the point about independent worker and DAO as a primitive, as almost like a challenger of traditional corporate structure, is basically thinking about now when these type of employments are happening, right? C Club recently, I know that just incorporated as well. And a lot of the C Club members leverage infrastructure like Opolis, to get health benefits, vice versa. So we can still see there's a gap between the legality on the blockchain and the legality in the real world. So something that we're also contemplating is that what are the right level of abstraction where we can start operationalize some of these, legal processes so that it becomes a little bit easier, right? Through the similar, signature-based consensus model. So, in the traditional world, we have DocuSign, we have these documents we need to sign. And in, this new world, it's the multi-sig that we need to sign. It's still signature. We're still it's a new form of consensus model where, how can we better closely connect the two to translate that legitimacy bidirectionally, both IRL to digital, digital to IRL. So those are the three things that we're really kind of tackling, but more tactically, what we're building is a set of tools. So the first tool is a membership directory where it serves as a CRM of who's in the community. And the second tool is a proposal first tool where we basically help the community members, create proposals, create ideas, and make decisions about those ideas and get funded with those ideas to bootstrap the reputation.
Okay, so small vision then, just really small and easy to achieve vision.
It's very, very small. And
It was, having just been deep into DocuSign land, I can firmly say that I prefer a Gnosis multisig and its UX, even with its all its shortcomings, to that organizational hell that we are still in the middle of. Okay, so that's fascinating to me. I think when I look at Station from the outside as it sits today, I'm seeing sort of bounties, and a bounty board is kind of being this sort of initial onboarding part. Is that still part of what you're doing, or has there been some lessons that have informed how you're evolving that right now?
That's a great question. So the first product that we launched is a product around, we called it decentralized hiring. So what it is that it's kind of a job board where rather than, a committee of people deciding on who to, bring in, we let the community decide. But, outside of a lot of the UX flaws of our product for the first launch, we kind of learned that a lot of community members just don't have enough context to really exercise their power. So, in hiring, it's such a specific decision that a lot of people just do not really have the context or the will to partake in, especially without a very clear incentive like referral bonus or, what did I get by bringing this person in?
Which introduces other dynamics that might not be ideal as well. So yeah, interesting.
Exactly. So we learn a lot from that, but something that we do get more conviction on is actually this idea of a more kind of bottoms up or permissionless way of participating rather than more like a job board or a gated way of participating. So we actually, since day one, decided not to pursue the bounty board route because we believe that bounty board, the scope of the project is usually defined by some admin or some project managers, which we believe that there's value in the product like that. Just there's value in Jira and there's value in, open sourcing potentially your GitHub repo for anybody to just come in and make iterations. But, kind of what the kind of problem space that we're tackling is a little bit kind of higher, I guess, more abstract in the way that, we want to basically handle the funding allocation on the larger scale. So let's say I want to create a marketing department and I write a proposal that I want to request $500K of funding to create a marketing department. Or, I want to allocate, $20,000 to this new iOS app developer that I want to fund and in order to build this new app. So those are the use cases that we're thinking about because we kind of make this hypothesis that, by looking at or visualizing where those large chunks of tokens and funding are going, it's actually creating a pretty high fidelity map of, how resources are being allocated, and kind of a more higher level view of what this person in the organization has done. Like, this person has gotten funding for creating a marketing department, and this person has worked with 5 other people on this larger project. So we're potentially losing some fidelity compared to a bounty board, but at the same time, we are also a little bit of like a more kind of higher level view of kind of the different departments and different work streams happening within an org.
Yeah, interesting. I think that's a really important lesson to sort of underline, because early on we experimented with some bounties and it just didn't make sense in our world. I think what's interesting, I think a lot of teams face, and we definitely face here, so we have we have more demand for contributing than we have pathways for contributing. And I think bounties, lots of folks thought, I think it's right to think that maybe bounties were like the best way to do that. Like, how do I get tokens into the hands of people who are actually creating value? But oh my God, if you have to manage that program and scope work, and then of course, like the work that's easily scoped is often the least valuable. And so you see most bounty programs being like, retweet this or do that. And it's just like, it's almost insulting to folks as well, because a lot of people actually want to feel like they're coming in and actually having an impact on this thing. They don't want to feel like they're just checking boxes and getting tokens. And so there's just like a lot of dynamics there that seem to not make sense. But of course, it leads to the bigger challenge, which is, how do you identify opportunities that folks who naturally have a lot less context and information than a core team or somebody who's been in the project for a long time can sort of jump in and participate in, absent that context and absent maybe, even just the effort to try to do due diligence on a person who wants to apply. I mean, seeing all these tweets today about North Korean hackers wanting to come and work for a DAO, which is like the tweet of the day. It just sort of speaks to this broader issue of like, how do we value work moving forward? And it sounds like, core to so much of what you're working on here is this idea of like a marketplace dynamic that exists within labor. Is that a fair statement? Like, is that a core interest to what you're building at Station now, or is that more just a personal interest?
I would say that's both a personal interest, but also like kind of what we want to focus on down the line. But right now we're really focusing on first building just the tools to create these agreements. It's almost like, if in order to build Airbnb, you want to go into people's homes and take pictures and build the initial infrastructure for hosts to upload their homes and give them the right guidance to actually list a attractive almost supply on the marketplace. So right now, I think we're still so early in this market where we're like in the going into people's homes and take pictures phase of the market, where we're helping a lot of these DAOs set up their operations and kind of give them some best practice of DAOs that are highly functional and what we've learned there, and potentially do a little bit of consulting for them as well, and then use our tools to ideally power some of these workflows. And with enough liquidity, then we can start thinking about like the marketplace dynamics as well. Yeah.
Okay. I'm curious, because I think marketplace dynamics are something that I have like big questions around. And one of those questions is sort of like, have this thesis that friction in a market is actually a good thing, and that the ultimate atomization of labor inputs, which, I mean, if you look back at like the early social tokens, like what our dear friend Ruben was doing, or the Pew token, these were sort of like, buy my token that represents an hour of time. And I remember thinking at that time and thinking like, why the hell would I want to sell an hour of my time, even if it is on sort of a bonding curve or price? Because like, if a freelancer, I want to get the hell away from that as much as possible. And sort of like, to me, like almost the ideal, like Ethereum is the marketplace, and we're seeing all these creators pop up and do NFT drops. And to me, that's like the indication of what this might be. But I think there's another sort of really big area of thought here, which I see you exploring very intently, which is sort of like around, reputation or other ways of being able to kind of capture and understand value that people are creating. And to me, there's some interesting dynamics around that. So I wonder if maybe thoughts on my statement, and then maybe how are you thinking about reputation, and is that the right word to use for what you're working on here?
All great points. So to the first point, I actually 100% agree with you. I feel like an overly atomized or overly marketized or securitized, even in this case, like quite literally, way of pricing your value as an individual human is, there's something like not just dystopian about that, like as like a just like technologist, but I think also it's I'm not sure if it actually works, although like there's the opposite side of the people that would debate on the other end would say that, kind of capitalism itself is kind of this dynamics of pricing people's time. But at the same time, there's also so much more than that, like where that's why, a company is not just, we kind of came from this profit maximizing world, and we realized that value is much more manifold than what capital itself can measure. There's a lot more than that, and I feel like we've made actually progress in like the capitalism as we see now, despite all its problems, compared to where we were. And I feel like if crypto's promise is that we are actually building a more collaborative economy where it's about sustainability, it's about growing with one another. It's about ideally, like, this is more ideological, but a little bit more equitable outcome for everyone involved, then I would say that the overly securitized way of working, we've already seen how that has played out almost. So I feel like I'm pretty aligned with you on that one. And the other point that you mentioned about reputation is definitely a tricky one. I feel like no one has really solved it, but we kind of have learned a lot of lessons just thinking through this problem for a while. Definitely, I know that this challenge has already been explored by a lot of the early crypto OGs, I would say, for many, many years. But just by like kind of judging with this new wave, which I think has its own characteristics of being more social and being more interactive with NFTs and DAOs compared to early just DeFi, we do see, reputation taking on some characteristics that are a little bit more similar to, honestly, some of the Web2 platforms, in the way that Web2 platforms and also, I guess, some like in real life communities as well. So just to give some more context, if you think about like traditional marketplace dynamics like Uber or Airbnb, like reputation really is strictly contextual, where it's like, oh, I'm a host and I'm a reputable host. I'm a Fiverr freelancer. I have a, reputation based on the reviews that people have given to me as a supply on the marketplace. So a lot of the reputation that's built in, Web2 marketplaces and networks are highly contextual in that sense. And that's why I think that there's actually something we can learn there, where it's like, reputation is a very contextual idea where, based on the kind of what you're doing, right? Like even if all the data that you have is self-sovereign, is interoperable, doesn't mean that, I have to just give all of those data to every single platform to kind of make sense of, what those things are. And from an implementation side, it's also very difficult for a new platform to, just read through all these different data about a user, even if self-sovereign or whatever, or more interoperable. It doesn't really change anything because right now we already have that in Web 2, and people will still select the relevant data of that user where it's actually useful for their product. So actually, I think the same thing, maybe similar things will happen in Web 3, but hopefully users just have a little bit more power in terms of selecting like what they want to showcase. So the reputation point, I think that there's a few things that is quite nuanced here. One is like users could potentially have a little bit more agency over, what reputation they want to have on chain and to add to their wallet, which usually is that passport in Web3 that where they carry over to other products to interact with. And the other, I think, is actually around, the front-end developers or the application developers knowing what kind of data to showcase, within the context of their application. And they will probably build application level logic that is unique to that application itself. So if it's finance, like they would probably index on their transaction history, on their past transactions with DeFi protocols, versus an NFT communities would index on their NFT holdings, vice versa. So it would be a little bit more granular. And in the context of station, I guess, around reputation, we know where our links are. We're not going to query like your transaction history, lending money on DeFi. Maybe that will become useful to us at some point. But for us, what matters is just, which organizations you're part of, right? What have you done? Like, have you gotten, voted on? Have you participated in governance? Like all those data about like, your participant as a contributor, as a member, around pushing the organization forward and basically evaluating them really as a labor and as a contributor of an organization are the data that we care the most about.
Yeah, I think that I share a lot of the similar sentiments on reputation. And I think for me, reputation at the meta level makes very limited sense. And I think it actually, the way that we're talking about it there is kind of concerning to me. There's actually a side debate around soul-bound NFTs. And for folks that haven't heard that term yet, it's like the idea of an NFT that's not transferable. It's popularized by Vitalik, but there's questions around like the naming of it, and people kind of soften the naming. And I was like, actually, I like this name because it highlights how bound to you this data is, and how open that data is. And if you think about, how we manage our reputation or identities online right now, it's through addresses, right? So I have an address that is like my public address that I go do everything with, and then maybe I have other addresses that are, maybe I'm building an anon account, or maybe I engage professionally in other things, and so all of a sudden you have this sort of split personality that exists in the world, and it's highly curated. And so, is there truth? What is the right one? But then also, operators here or people in the space are being very thoughtful about, maybe I don't want to showcase how much of a degen I am, and so I have a degen wallet, and that's separate from what I'm doing here. And so that meta never really clicked for me. But then when I start to chunk it down, I think about C Club, which is like, what are some of the core actions we take? Well, we want to find, choose, and support the best community token projects, period. And so one of the big questions we ask ourselves are like, how do we choose? And who are great choosers? And so those things start to become really interesting when, if we go over 10, 20 cohorts, and we can start to say, well, of our community who participated, Tina has actually been an incredible picker, and therefore, well, what do we do? Theoretically, you should probably have a little bit more of maybe a boost to your vote, or access further up the stack to participation there. So I think in those like really clearly defined like driving value towards like the end structure or mechanism we're working on, I think that makes a ton of sense. Do you see, like, is there a lot of blue space between those two worlds, that meta and that real specific tactical thing, and what might that look like?
Yeah. I've been actually thinking about this a lot recently, so this is super cool that you asked this, is that I feel like there are some like meta level reputation that could be useful, but need to be done in a very thoughtful way. Like, for example, like KYC or some other services that every single DAO needs, right? With their, anybody who's receiving funding a lot of times. But that really doesn't have to be provided on a very individual basis. Like, they just have to be done like maybe once in a while, or once like every transaction, like whatever that is. Like, I think that's something that potentially can, maybe a company would build this, where like basically it's even like some companies hacking together something like, using a persona verification and has this person KYC and provide an NFT that showcase and certify that this person has been KYC'd, vice versa, to create like more efficiency there, because I think that definitely is a process that a lot of DAOs like run into. The other thing is like, basically PPI and how do you handle that? So basically personal information, and there's some protocols like Privy who's working on like, encrypted personal information and tying that to the wallet address, which would be tremendously valuable. But like, what kind of mechanism are they using to actually verify that this person has been verified by Privy and it's a real human, for example? Like those like kind of general Sybil resistant mechanism that is not completely just reliant on on-chain consensus mechanism, which, is kind of probably the purest form of like Sybil resistance, but it's kind of hard to achieve because some people just are more used to Web2 primitives in general. So like really, it's really cool to see innovation on that end in terms of like a global reputation where this person is someone who's trustworthy. And, some like platforms like Mirror just simply uses Twitter as a simple auth as well. So that, I think those are universal. But the specific ones like you said, like, governance participation, activity participation that's specific to a community member, like those like are very, very interesting to us as well. And we kind of find that the highest correlated thing about someone's activities are actually like in a very pure sense, it's actually how much funding they've been allocated to outside of course, the early founders. So if this person has proactively participated for a while, then they probably have a recurring, payment, which is how actually, when people get loans, people get, kind of any financial services in the real world, the first thing people look at is their pay stub and their W-2s and, these things, which actually, makes a lot of sense to us as well. But in addition to that, of course, there's operating data that you just mentioned that matters a lot as well.
That's super interesting. I love just the way you phrase that, because I hadn't considered like if we back it out from like the pay stub, what is the pay stub here, and like how much you're using that for reputation in a very messed up credit world / whatever. And also like very clearly, like if you are participating in Web3 and working for a DAO, depending on what structure you're using, you might not even have that, which is a huge limiting factor if you actually want to go, I'm very lucky that the room I'm in here is part of a house I'm in here that we're only in because my lovely lady has a corporate job, and just running around doing degen stuff in Web3 was just like not gonna pass muster with our lovely banks here. So I think one of the ideas you sort of floated earlier was this idea that reputation can kind of persist in other communities. And I think I would push back against that. But when you're saying like sort of funding as that core metric, as far as like almost reputation or a proxy for reputation, is that sort of like the first place you really see, like if I am allocated through work streams a certain amount of capital and we're able to sort of track that backs into sort of another reputation number and therefore would lead me to trust you more in multiple other systems? Or I'm curious if you can unpack that a little bit, because that's fascinating to me.
Totally. We definitely find a lot of dangers in any reductionist approach of, kind of compacting things into a score, because that's kind of runs into the black box algorithm problem where it's like, how do we decide on the reputation? How much weighting should we put on each of these variables? But I do think that it would be valuable for us to kind of service those data so that other communities can decide what actually matters. It's almost like show you the things that, kind of are interesting and matters. And these are the high fidelity things that this person has done in this community. Like they've joined this work stream, they voted on these important proposals, like they've gotten this much funding from the treasury, they've worked with these people under this guild and this work stream, and you can make your own judgment about the person. Like the data is here. So that's kind of like the role that we think that we play, is more like this, almost like this data cleaner and servicer and provider and generator, because we're like providing the tools to generate these data, rather than having a very strong opinion about, like computing any type of score to showcase what type of contribution actually matters more. Because for some it could be social media engagement, for others it could be like not social, like the anti-social media engagement. So we wouldn't be able to.
Well, I think and where are we going for this right now is like, Etherscan, right? So I would look at Etherscan and trying to decipher information from Etherscan is maybe not the most useful or easy, but like a front end that is pulling that data and making that clear, I think really would be the way I'd want to engage with it. Because you're right, I'm not interested in a score. I remember back in the early social media days, the clout score. I don't know if you remember the clout score. It took all link your account, and it was just it led to like really, douchey behavior, I think is the right term to use, if that's appropriate still, and was completely reductionist. But like a quick scan of somebody's Twitter profile would give me a lot more information than, are they getting replies, are they getting likes, is there engagement, does it match the number of followers I have, okay, is this, and so I think being able to service that data for a community is super useful. And a thing that we think about a lot, and within an organization like C Club, and I think more broadly as well, so much of this is reputation based as an organization, like brand based, right? Like our ability to go in and work with the best projects is what sort of it builds this brand, and that brand sort of allows us to continue to work with the best projects. And the risks there and the challenge is like, that can be a fairly fickle thing, right? And who's part of your community and how those act. And we've seen a number of cases of that, maybe a couple months back in the DAO space. And so there's like this deeper need for diligence, I think, on people who are coming in and taking ownership. And right now that is a very, very manual, difficult process. And so I could see just, allowing somebody to sort of have a better scan of broader context of how somebody's interacting. And of course, not going to capture everything, but seems like an interesting part of that stack.
And because there's not even that many, besides Snapshot and maybe Mirror, there's really not that many tools that are generating those data. So we also believe data generation by providing the tools is important now. If we were to build Station, like, 5 years or 3 years from now, right, there's a lot of tools that are capturing these data that we can be an aggregator of these data, like you mentioned. But right now, we think that there's not even that many interesting data being generated yet. POAP.
Coordinate is a really interesting one, depending on how that kind of rolls out. Because then you start to access, like, that is actually almost like value as reputation in a very small sort of box or category, I guess. But it is, in speaking with the Backdrop team, who, Joey and Raph are good friends, just like understanding how truly, limited the sort of data is out there. And of course, like the other issues we sort of talked about before. So I feel like I sort of took us into this conversation about reputation, but there's a big chunk, I think, in sort of this new positioning that you shared here with Station that is probably worth diving into. And it sounds like you're talking about the sort of bottom-up participation and more like being a place where these communities sort of, sounds like, launch and operate. What is the status of that right now, and how are you guys thinking about that over the next few months?
So the product that we're immediately launching, some alpha here, is like you can basically bootstrap. So we believe one of the missing infrastructure is actually like a basic CRM of who's in your community. And a lot of community like actually don't have that besides, a Discord and maybe a list of addresses. So we actually want to just visualize who's in it. So the membership directory is the product that we're calling it. So you can import your Discord and the roles, and you just categorize these members and their work streams or guild, whatever that is, just showcase who's in the community. Immediately after, we want to actually leverage those data and push a lot of this on chain. So, basically thinking about like a proposal system where, anybody who's part of the community can now, if you have a certain role, let's say in C Club, you are a club participant or you have a club token, whatever standard that is, and you have a certain Discord role because you maybe have done something in the past that you can propose and propose an idea and get funding. And that funding will actually be sent directly to an inbox that C Club can receive. Everybody in the C Club community with a certain role can view, and people can essentially, look at all these proposals that get sent into C Club and be like, okay, maybe someone wants to get funding from C Club, someone wants to contribute to C Club, and a variety of different ideas. And, C Club can use this as one of the kind of top of the funnel way of, getting a lot of inbound interest of contributing to C Club, have a better way to organize them because now you have data about who the people are who are submitting them, and then execute funding as well within one place. So you can be like, oh, this is super cool. Like, let's make a decision. And then you can like sign with your multi-sig signers and deploy the funding where you kind of receive those ideas. So that's kind of the next product, like next suite of product that we're launching. But generally, the reason why we like proposal as a primitive is because it's quite universal across every single DAO we've talked to. And it's a generalized enough form where, on the other side of the execution, it can be executing funding, but it can also be executing, a promotion, like a role update, or NFT mint, right? Like if you get in, or if you get, accepted this proposal, you get like an NFT and you get a like certain amount of funding, whatever that program is. So, that's something that we're super excited about. And, with the NFT, with the funding, we, again, back to the reputation point, we're building these reputation of the contributors that are contributing on chain.
Yeah, I think that's interesting. Like the velocity of proposals is really low in most DAOs. And
Totally.
And for the same reasons we talked about before, I think there's a lot of information asymmetry. There's a lot of risk in putting forth a proposal if it's going to fail. And I mean, watching some of the DAOs out there sort of navigate this downturn through a set of proposals has been, interesting to say the least. Yeah, we're very much exploring how to start to remove the stewards in C Club as a bottleneck to proposals. Simplifying that as a process is really interesting. I think Nouns DAO with their props, I think it's called, where they have it's like a set budget that people can apply towards, and so you're fixing the budget but expanding the potential of we just want to spend 3 ETH, but to support Nouns, how do you want to do it? And I think that's a really interesting thing. And so it just shows that there's, I think, a lot of gaps in primitives or mechanisms or user experiences, I think, that could really unlock a lot of value here. So you do see people like, are DAOs launching on Station? Is Station a service provider to DAOs? Like, how would you frame that?
That actually kind of shifted kind of from the beginning. So in the beginning, we want to be contributor first. So we want to be a place where, it's always about the contributors, and then DAOs are almost like, it's like a marketplace of DAOs where people can find different DAOs and join them. And, over time, we wanted to build the tooling to actually get these DAOs onboarded and provide utility and value for these DAOs to actually, want to be a part of the Station network and, attract talent over to their DAOs. But then we realized that, DAO tooling itself is almost like a paradox, an oxymoron in and of itself in some way, because there are like a lot of legitimate DAO tooling, but at the same time, like the motion around tooling, right? Especially the tooling as branded as more like a SaaS tooling. There's usually like an admin view, right, within a DAO, but a lot of times DAOs are so fluid that a lot of the kind of software logic starts breaking down. It's like, who's going to be the first to adopt this tool, and how can we make it so that anybody in C Club, if they find this tool useful, can start using it the same way that potentially anybody can create like a mirror publication that's a C Club fork or something. So we start thinking about what are the tools, how can we build tools so that people can adopt them super seamlessly and easily to immediately like showcase the value, and also like C Club on the other side can also immediately receive value from using a tool like this.
And that's actually where we started thinking about proposal as a peer-to-peer mechanism where DAOs don't have to adopt us. Any individuals can almost like start sending proposals to C Club, where if C Club, let's say, gets so many proposals of people that want to join, then it's almost like a demand-driven thing where C Club will be like, okay, like it doesn't hurt to get another, top of the funnel channel on Station. And because we already have people that want to join. And of course, like membership directory and a lot of other products that I mentioned to you are also like, meant to solve some of the immediate organizational problem of like organizing proposals, organizing people, like understanding kind of who is proposing what, like who has gotten funding for what, and actually showcasing those activities as well.
Yeah, through that framing, I actually see what you mean by marketplace in many ways, right? It's you're aggregating interested contributors and participants, and theoretically, if you have a high quality of those, I'm going to be paying a lot of attention to anything that comes through Station, because great talent comes through Station. And then on the flip side, you have this sort of like free or like, way to get DAOs onboarded through saying, well, hey, here's this tool for a membership directory, which, we are in the process of developing right now because it is a need. And you're right, like there's just a lot of duplicate work being done on that across the space. Very, very interesting. You had said something early on in your introduction that I kind of want to take us back to. You said we are in danger of repeating the history of Web 2, or at least the errors of our ways. I would love to dive into that a little bit. Like what are we doing wrong right now that is maybe setting us back or holding us back, or maybe nullifying the ultimate vision that I think so many of us hold with Web3?
Totally. I would say there's quite a lot that I'm not going to comment on because I think that I haven't developed a view that's like, I think, strong enough to share in public. But one thing that I do have very strong opinion about is this relationship between capital and labor that we just discussed, which is, if we do believe that, Web3 could potentially bring more value and accrue more value to the creators, then the way that we design our tokenomics, the way that we distribute tokens to, people that actually make the organization happen, that are building towards the future of the organization, they are allocated the right, like both funding, but also the right ownership and governance structure so that they actually have privileged access to resources. They have privileged access in liquidation event. So, we don't want to see a world where, when things go south and then there's a liquidation event and whatever that is, and the first people to, get their money out are the investors again, which I think that there's definitely those protecting provisions exist for a reason, but at the same time, like, I think that what we're here to do is potentially rebalance that like power dynamics a little bit in Web3. So that's definitely something that I hope that we won't make the same mistakes again.
I appreciate you. I love when somebody says I'm not ready to comment on that, because I think that shows high integrity of your visions. I think I agree with you there. And I think what's interesting is that dynamic, putting words in your mouth. I'm assuming you're looking at sort of Luna and some of the ways that there's some rumors that investors are made whole, and despite Vitalik, I think, making a really great point of like how we could actually make small holders whole. And, just really, I think the epitome or a great example of just how effed up short-term incentives are in here. And both from a personality side and like the whole thing is ultimately a mess. But on the flip side, like one of the challenges is that we have this like broad lack of regulatory clarity in this space, and it leads to like major blockers, right? So the regulators are doing significant harm, because they are not clear in how these organizations, or giving a pathway to these organizations to be created. And like, the purest form in my mind is that, if you're using a token to represent governance in a thing, everybody should be treated equally there at the very, very least. That one token equals one token, and I think there isn't pref shares associated with it. I guess the challenge is that, there's always preference in the fact that you have different relationships with different people. But when you end up having corporate entities and foundation entities, and then tokens that don't really represent anything with the claim under it, we just sort of muddy the water and create this massive space for con artists, not calling anybody out, but like people who truthfully want to take advantage of that to their benefit, or maybe the worst of our human, nature, where when we're back is up against the wall, we make decisions that are not ideal. And I think we do need to have these structures in place that minimize that. I think they exist. I think it's just that most teams aren't going for them due to concern around legal structure. And then even in those, I think, there's a number of challenges in that, we don't have small shareholder or token holder protections baked in the way that equity markets do. And I don't really know what that might look like here, because, I guess your pushback against my argument that tokens can actually do that is that, well, okay, tokens are often still concentrated in the hands of early investors in the community. And, it doesn't take a whole lot of those people to come together to actually push a proposal in their favor. And, you're just sort of hoping and praying that that doesn't happen in some instances. Is a bigger issue here governance and structure? I mean, I think there's sort of two threads I see here. One is like, I think you're saying one token, one vote has a bunch of issues to it. And I can sort of understand having this conversation with you where you're coming from there. Yeah, maybe let's start there. Is that an issue, or can we just solve governance?
I would say that it's an issue to an extent that like it, especially when, one token, one vote just means that you're conflating like the features of, governance with like basically ownership, like equity, like structure. So when like, VCs or when investors invest in a company, they are looking for economics and control. Like those are the two terms that they mostly look for. And it's totally understandable. But then like if, you use that structure, then inevitably the people that have the most capital will have the most power if you conflate the two things completely. So it's more about like, how can we, without taking away. So right now it's almost like the power dynamics is completely not even talking about the economic kind of, value sharing mechanism because of the complexity of these institutions that ended up making the token itself completely valueless. Like that's a separate like discussion already. But just focusing on this conflating governance power with economic power, like that's fine, but I think that just needs to be like thoughtfully designed in a way that, like, for example, like, is there a way to represent your rights and your power in certain decision making like component, like let's say organizational decision or operating decision that actually impact the future of the like project to the hands of people that actually, have vested interests in the long-term success of the project. And, company like investors are doing so through delegation usually, which I think that is already, a improvement. But right now, I think that even the delegation process is not as transparent as it could be and always could be improved. And also like the who gets to actually become a delegate. And I think that like, even some of the most transparent organizations that we've seen don't have very clear terms of how the delegates elected, what do terms look like, and all the transparency around like general corporate governance hygiene is not necessarily there. And that's also just to, compare this very strictly to corporate governance, which might not always be the case because people always also compare it to like more like a city or city council or, but that's also different.
They're all imperfect, I think.
They're all imperfect.
Adds to the complexity of it. There's a lot of excitement for governance process. I think, why we started C Club back in almost 2 years now, was there just wasn't enough projects out there for us to even begin to start to run these experiments with. And, us and many others have really, I think, added to those number of projects. And so, I think that there are many more experiments that are happening right now. And so the speed, and I think we're going to see this pretty tight cycle of learning here over the next little while as, our market is less bullish and, people start to reflect on what's going on. And I think, one of the things I'm reflecting on is like, and actually I asked this question when I think we were both at USV, at the Portfolio Summit back in the day, a couple weeks ago, and I was hosting a conversation on Web3 economics, and I'm like, do we even know what the hell we're talking about? Like, do we know? Like, is there an economic model in Web3 that really makes sense? And I think, that the answer was like, yeah, probably for L1s and infra, but when we start to step up the stack quite a bit, like it's pretty clear that there's a lot of room for improvement. I wonder if you have any thoughts on sort of the token economic models, either in how you're thinking about it for Station or the projects that you're working with, and like maybe level set us. Where are we today?
I feel like general token principle is like, I have a few principles. One is like, keep it simple. Just like, I think a lot of projects just overcomplicate things. But the other thing is, I will actually elaborate on the first a little bit more. Keep it simple as in like, make it clean. Like, the token should just be, incentivizing a few things and also potentially carry a few governance power, right? That is clearly outlined, like what those things are, and sometimes, if it's necessary, separate them when, one token is representing governance power. And a lot of projects now are experimenting with NFT as the governance power structure. And then the token is like purely economic. So making sure, the intention of the token is very crisp, and then like understanding what each token is here to do. And like kind of, like, unless you're Curve or one of those ecosystems that are able to pull off that really complex, like, multi-token mechanism, which I see a world where that could exist. But, they also exist very intentionally where each of the token is traded with different prices because they represent very different things. Like, some represent, voting power over where liquidity can go, and some represent power in the sense that, the governance over the protocol itself. So it's also like there's some nuance there that they actually thought quite deeply about, I would say. And the second thing about token design is actually, thinking about like, I think it's kind of connected to the first point around functionality, is that there's this like, I think, general trilemma about token. Is that I think right now tokens are being used in some communities as the store of value, the medium of exchange, and access as membership. So a lot of times, when you have market characteristics of something like an identity token, right? Like, what does that look like? And I think that that's something about soul-bound token, especially when, soul-bound token, what if they're sold, right? Like, you can't sell them because they don't have market value. So I think that kind of conflating a lot of these concepts together usually is like generally impossible. And that's where the trilemma concepts come from. So that's like the second thing that I've been thinking a lot about as well. And I guess the third thing about token design is that, like, by the end of the day, what token is for is a unit of account for value. So, it should be something that's measures like, whatever is valuable in your ecosystem, and you use that to incentivize or to capture that value, incentivize the creation of that value or capture the outcome of that value creation. Otherwise, I feel like token for the sake of it in the very beginning usually, makes it very difficult for the product to pivot, because like once you creating or encapsulate that value creation and capture mechanism, then your product could potentially be capturing value in a very different way than a token. So it ended up kind of limit yourself in what you can do with the product, or the token is kind of it become valueless because the way that the product works and the way that the token capture value become different.
Yeah, we saw like a lot of that, 2017, 2018 was sort of like the defining thing, and I'm assuming we'll see that again. Yeah, I think that's interesting. I think like the VE token model is TBD on how that plays out, but it is really, I think it's getting at exactly what you're talking about, right? Separating sort of long-term conviction with governance rights and a very clearly defined game with like major financial stakes, which is interesting. I think we're seeing a lot of teams pivot to that and start to apply it in many ways. So again, I think just such a bullish thing for our space generally is that we have the ability to run these experiments. I don't know if they're going to work. Like, it's definitely not something that I think would work in C Club's case, but there's some insight in what you shared there around like if you're building a product or a community right now, giving yourself time to get to a level of understanding and clarity before launching a token, I think is really freeing, or at least before you have a market for your token. And we very much followed that line and still have like a very minimal sort of token supply out in the world, and a lot of that is because, and even our mechanism is fairly broadly defined and up for evolution, because we just don't have enough information right now to be able to go and bake that in, and it just seems like an absurd thing to try to bake in. And yet I think again it speaks to like the short-term incentives of the space. Like, very easy to go launch a token if you have momentum to get price around it to make a bunch of money, but like, what happens? And I always use, like, for me to represent this image is like, our job is to go start fires, get a nice fire going in our backyard. The last year and a half was people throwing pallets and paper and gas and striking a match and then stepping back and be like, oh, that's kind of a little hot, and it burns out. And I think for those projects and the ones that I'm really excited about, and I hope C Club is viewed this way, we're chopping kindling and we're getting the coals going, and it can rain, it can wind, doesn't matter. That's still going to burn. It's going to be much easier to get started in the future. And very, very, very clearly in my mind, a mark of, I think successful projects will follow that latter path. And to do that is actually one where you have to really strongly push against so much of the short-term incentives that exist. And so, I mean, I think the thing that comes up for me so much is just how important the people and the vision and the ideology that's sort of behind these projects are. And there can be quite a stark difference. You and I probably talked to many, many different projects. This conversation here is really, I love that this is like our first in-depth conversation. We get to have that recorded here because I love how you think about things and how you phrase things and the thoughtfulness of which you're approaching things. It's not at all the vision I had for what Station was. And so I think you're showing like that ability to make those pivots and act on it. So yeah, really excited to see what you pull out and also just, appreciate the work in the space that you're holding for folks through DAO therapy. And, I'm just such a big fan of, our core thesis is that value will flow to communities in Web3. And I'm very certain, regardless of what the market does in the next little while, that we're going to prove that out, in spades, because you're not going anywhere. I'm not going anywhere. Our communities are here, just thriving. You get to go talk to cool people all day long. It's a privilege of my lifetime to be able to do that. So I really appreciate you taking the time, Tina. Is there something you want, like, did we not get into? Do you want to share something with the community, or at the very least, where can people find you on the internet?
No, thank you so much for having me. C Club is great. Like, please keep doing what you do. And like, it's really, really great. It's like solving the supply issue of we need more DAOs, we need more experiments to showcase how it can be done. So super, super excited for that journey. And about Station, like, yeah, follow us on Twitter and our journey. We're going to launch a bunch of products. Like, we're really just a team of designers and builders. And really, like, we joke that we don't do enough marketing, like, compared to a lot of Web3 projects. But hopefully what we put out there is something that we're really proud of and hopefully can bring value to the ecosystem soon. And so, yeah, definitely stay updated.
Well, everybody, before this call, I was like, oh my God, like, Tina and I have never talked before. I don't know. Like, I only know what's on the internet about her. So I asked my team, and through it, I was like, oh, we have some Tina fans here in our community. So I'm sure they're all excited to listen to it. Tina, appreciate you taking the time to share with the club community, and really excited to get to work alongside you on this big vision, and stoked to see what you guys build.
Amazing. Thank you so much, Jess.